How does accounting help businesses? Businesses need cash to operate. They need cash to pay salaries, buy inventory, and make large purchases, sometimes called capital purchases, like equipment in order to run their business. Businesses get cash primarily from two sources. The first source are banks. In accounting, we call them creditors. And in finance, this is known as debt financing. The second source is investors. You can think of the stock market as investors because stockholders are investors of large corporations. But an owner of a small business is also an investor of the small business. In finance, this is known as equity financing. So how do investors and creditors decide who to invest or lend money to? This is where accounting comes into the picture. Accounting records the financial transactions of a business and communicates this information to potential investors and creditors. The output of the accounting process are the financial statements. An income statement reports a business's profitability. A statement of the change of equity reports the changes in the owner's equity. A balance sheet details the economic resources of a business and the claims on those resources. Finally, a statement of cash flows summarizes the cash inflows and outflows for various business activities. Businesses with good financial statements tend to get the money. Businesses with poor financial statements often do not. This is because cash, again sometimes called capital in finance, is a scarce resource. Investors and creditors do not have an unlimited supply of cash, so they have to choose who gets it and who does not. This concept is called capital rationing. But that creates a dilemma for investors and creditors. How do they know that the accounting from one company to the next is done correctly and with the same procedures and guidelines? The accounting profession has a list of accounting standards that must be followed to ensure that all similar transactions are accounted for the same way. These standards are known as generally accepted accounting principles and will heretofore be known as GAAP. So GAAP are the accounting rules that tell us how to account for specific transactions. GAAP is the